Hello and welcome to the Opus Wealth Style Podcast. I'm here with my business partner and good friend Iván Watanabe. Iván, how's it going today?
I'm great, man. How you doing?
Another great day in paradise. Excited to
For
have this
sure.
conversation as per usual. So today we're gonna talk a little bit about what are conversations that we're hearing today, and lots, wide ranging of topics, and why having a financial professional in your life could be helpful in times like these, but also more hopefully try to make it more timeless of what are some conversations that not only happen today but always happen, regardless of market cycles, emotional well-being, and the like. And so let's kick it off from there. So Ivan, I guess let's start by saying what are some of the most common questions or topics you're hearing today, and then go from there.
Yeah. I think a lot of my clients are sort of trying to navigate the real estate market, right? In some form or fashion, whether it's
Hmm.
their primary residence or a second home or vacation home or an investment property. I feel like a lot of my conversations right now are about interest rate environment, right? And is this the right time to buy or not buy? And just really trying to set the context for clients as to kind of what's going on in this current environment is um, I'm probably having this conversation 2 to 3 times a week, honestly. Are you having similar dialogue around that?
Yeah, even like a step further, I would say there's just the large majority of people are just making the large assumption, some right, some wrong, that it is not the right time
Hmm.
to be going buy their first home, their second home, vacation home. And what where the conversation typically evolves to is, well, the market is always changing. You can't control where interest rates are, where they're going. All you can control is your personal financial situation. And so it's more of a conversation of when does it make sense for you and your personal situation? Because, while rates are a lot higher today, we're recording this April 2024, are a lot higher today than they were 2 years ago. They're still below average when you look at the longer term history of mortgage rates.
Yeah.
And when I share that, most people are kind of surprised by that and maybe a little scared because they thought maybe everyone kind of assumed bull market rates will just go back down and back down to quote unquote normal in a year or two, and I could just refinance. And maybe they will go back down. I don't know if they'll ever go back down quite to where they were in 2000, 2021,
Yeah.
uh, and the like. So it's I don't know if you always want to be playing the waiting game and waiting for that, but you got to balance it with whatever else is going on in your life.
Yeah, I think the context matters, right? So, I feel like a lot of clients, as you said, are certainly rates are high, right?
Hmm.
Common thing. Okay, well, rates are high compared to what? Like all-time lows? Yeah, totally get that,
Hmm.
right? We're not going to be seeing, in my opinion, sub 3% mortgage rates maybe ever again in our lifetime, right? The average 30-year fixed rate is around 8%, like lifetime, right? So when you put that in context, and people are like, well, my rate's close to 6% or 6.5%. Like, I remember when I first started in this business, if you had a sub like 6.5% mortgage, it was like gold,
Hmm.
right?
Hmm.
It was incredible. People our parents' age, when they bought their first home, rates were like 15%. Now, granted,
Hmm.
the price of the house was like 100 grand, right? So I get, housing prices have gone, astronomical. But I think keeping that in some general context is extremely important. The other thing of this, well, I can just refinance when rates drop,
Hmm.
right? The conversation that I keep reminding clients when they start bringing that up is job security, right? So what are the factors that determine whether or not I'll be able to refi? Well, do I have a job or not?
Hmm.
Does my spouse have a job or not? Do our incomes allow us to refinance at that point in time? And that's got to be kept. If I have two physician clients, the job security is tremendous. If I've
Hmm.
got two clients in tech, I don't really know. It depends. How are they doing? Are they somebody that bounces around jobs? Is it a salesperson that has transferred to 4 different companies in the last 5 years? That's not going to look great. Maybe they can't refinance. So it just keeping that in context is extremely important.
And another good point there is that why would the Fed lower rates? They're only going to lower rates when when the economy is starting to show signs of stress. They're not going to just lower rates because everyone wants lower rates. Right now, they're keeping rates relatively elevated because they're still trying to get inflation down, and it's not coming down as fast as they had hoped, or at least the market had expected. And so right now, you're hearing the sentiment of rates are staying higher for longer, which is not too surprising to me. That if they're really trying to get to 2% inflation, it's could take a while.
Yep.
And so it's there's different decisions to be made when rates are at all-time lows, different rates, different decisions to be made when rates are at all-time highs, or just higher, let's say.
Yeah.
But again, it's such a good point. Take the macro perspective of, well, what's going on in the economy? Because if rates are coming down, then maybe my job's not as secure, maybe my company isn't as profitable as they were a year or two ago. And so it's all just part of the bigger picture, that always you want to make your financial decisions from the bigger picture perspective, as opposed to just any one specific silo.
Yeah, and I think, again, that's part of the reason why we have such a great model, right? Is this holistic approach to actually review the cash flow. Like, let's talk about affordability, whether or not it's a good time or a bad time. The mortgage rate's the mortgage rate, the escrow payment, the PMI, or the principal and interest, like all of those things factored in. Let's run the cash flow numbers, and can you even afford the house at the current rates,
Mm-hmm.
right? And you and I sort of we operate on the same philosophy, where if we can save first and make sure that we're being incredible savers first, then if your new mortgage, I don't care if the rate's 9%, if it falls underneath that threshold and you can afford it and still continue to save at a high rate, then
Love it.
God bless, and you
Yeah.
keep it moving. If you love the house, and then you refinance, hopefully when and if rates drop, like, it is what it is.
Yeah. If you can stick to a great savings rate, spend the rest. Go for it. Enjoy your life as you should. And you could always live in a box and squirrel away every last penny if your intention is to retire as early as possible. But we also have a lot of clients that don't really want to do that, that they may want to work part-time in retirement, or work for as long as they can because they enjoy the work. And so, just further to the point, that every specific family is going to make different financial decisions with relative to what's not only going on in their life, but what they want out of their
Yeah.
lives.
Yeah. So I mean, I think, again, the whole purpose of right now is just kind of what's in the mindset of the market, talking about buying, good opportunity, bad opportunities. This is the right time. I think it does make it tougher for investment properties, though, right? Because the higher the rates are, the
Yep.
less margin there is for profit. And so, does it even make sense? Can I turn a profit, right? Do I think, at these rates, I can charge a rent that will yield me a profit? It becomes tighter, right? Those margins become smaller and smaller and smaller. And so, the numbers really have to work in that sense. For your primary residence, again, you can overspend, so to speak, if you're saving still. But if you're making an investment property decision, like, it should net cash flow positive from day one, in my opinion.
Ideally, yeah, I'm
Right.
I'm with you there. And so, the with rates going up, we've heard plenty of that. Rents are also going up, and
Yep.
it's not surprising. Interest rates impact everything. And what I like, they impact more than I think people realize.
Mm.
Like, when interest rates change, that changes the value of assets, not just what you can borrow. But the technical term would be like, if you own a business, it's typically valued at the present value of their future cash flows, like how much are they earning. And so when interest rates have an impact on that. And so interest rates aren't the only conversations we're having today, but it's certainly a big one, as everyone, kind of the market, is focused on what is the Fed doing next. When are they cutting rates? How long are they going to keep them at this point?
Yeah. It's interesting. Like, simultaneously, we're having conversations, right? So the borrowing rates have gone up. Markets are cruising along, right? They're performing extremely well. All these other opportunities are coming to play. Inflation's increasing. Costs, incomes aren't necessarily increasing at the same level as inflation. So clients, I feel like are sort of trying to figure out like where should I be going to fund my next opportunity, right? Like make a different investment, but they don't want to sell their equities
Hmm.
that are cruising along to then liquidate that, pay capital gains, and go move that money to some other investment, or buy that property, right? And so, we seem to be having, or I seem to be having a lot of conversations around like where's the cheapest money right now? Like
Hmm.
where can we go find that? Hey, my home equity line of credit used to be at 4, now it's at 10. Do I still want to do that? Should I be entertaining a 401k loan, or should I be loaning for my cash value life insurance? Because right now, I don't know what you're seeing, but the life insurance cash values, depending on the carrier, seem to be the cheapest money on the street for leverage, right? Um, and so that seems to be a good opportunity for people to take from there to go make investments in their business. I'm not recommending that people do that. I'm just saying that seems to be the decision that I'm seeing often right now.
It's definitely like that time where interest rates have come up. And so you hear that, or you see that with traditional borrowing, like you said, home equity loans, lines of credit, asset-backed loans are also, probably going
Yep.
to be elevated just because interest rates are where they are. So yeah, I'm also having a lot of those conversations of, if we do want to use leverage, this is the taking a loan against the cash value is often going to be, at least today,
Yep.
the best place to go, especially if you could, expect to earn a nice return on that side investment.
Absolutely. I mean, I think that's part of our conversation that is tried and true always, but especially in a time like right now of true liquidity, right? Like
Hmm.
what assets really have liquidity? What assets really have leverageability? Can we get to them? That flexibility is an ongoing conversation, not just today. Again, given an environment where rates are high to borrow, investment accounts are up, so you don't necessarily want to leverage that and pay additional cap gains. So where can I go for true liquidity? That's just not a today conversation. That's an always conversation, right?
Always.
Always trying to have access to capital, always trying to find the best way for us to get access to money, depending on whatever's going on.
Today's April 17th, 2 days after tax day. And unfortunately, I received a few worried phone calls and emails that they got this big tax bill that they weren't expecting. And so money had to come from somewhere.
Yep.
Right. And so, yeah, you don't want to be taking loans from your 401k to pay the tax. You
Yep.
don't want to have to sell appreciated market securities to pay the taxes. That incurs more tax. And so liquidity, flexibility, should always be a center piece of your plan. And that's kind of always evolving. So you always, you wouldn't want to keep too much money in cash at all times. And while cash is king, it's always going to be helpful. Leaving too much money in cash is not earning anything. And so there does need to be a balance of, where are you allocating your money? How much access do you have towards it? What kind of risk profile is in each one of these different buckets, tax profile, et cetera. And so, you go down that rabbit hole, it can get a little complicated, but at the end of the day, what you're trying to solve for is, how do you maintain the most level of security and flexibility within your finances?
Yeah. So I think that is a today conversation, and again an always conversation that we are constantly having with clients, to because we have the full picture of all the assets. It allows us to be strategic in where we're putting the money, right? I can't imagine trying to sit there without somebody that has a clear picture of all the stuff I have going on, trying to figure out, okay, well, should I take from this account, take from this account, take from that account? What if I do this? What if I do that? I think part of our value proposition in general has always been like, a space to beta test all of these kind of decisions, right? And analyze them and quantify them and really, help sort of solidify whatever that's going to be.
Yeah, help people just talk it out, because without
Yeah.
us, they're either going to the each individual, maybe financial institutions or professionals that specialize in that area, like their investment account or 401k or wherever, or they're just relying on friends, family members, Google some questions, but they're not, their friends, family, Google, and are not going to know the details of their finances,
Yeah,
at a big picture perspective. And so customized advice is always timeless.
definitely. And what else are you hearing, or what are any other common themes that you're kind of getting, or things that you're having conversation with clients right now?
The Bitcoin is has
Mhm.
surged lately. So it's so funny. There was, what was it, a couple years ago when Bitcoin was, surged a lot, and then all of a sudden it seemed like every single meeting people were asking me, should I be investing in Bitcoin or some kind of cryptocurrency? I remember one of my clients was telling me that their mother, who's must have been in her 70s, was trading in cryptocurrency. I was like, all right, that's I think that's the sign of the top right there. And then, for a while, then I didn't hear anything about it, right? Because Bitcoin went down, which I guess moves, the entire crypto market. And now we're back to what, 60 plus thousand
Yep.
on Bitcoin. So, and now people are starting to bring it up. Should I do it? Should I sell, my Bitcoin that now finally came back to, so it got, reversed a handful of losses. So that's a conversation that is coming up now, which is, just very of the time, right? Not
Yep.
necessarily, stick to your strategy, but like fear of missing out, wanting to get the latest return. And, there's lots of that. Remember, what was the like the basketball cards that were, as an example, the basketball cards or moving art, what was that called?
NFTs.
NFTs. Yeah, yeah, yeah. Remember those?
Yeah.
When was the last time you heard about an NFT? But they were huge, like what, just a year, two
Couple,
years
just a
ago?
couple years ago.
Yeah,
Sure.
yeah. And just, and I had some clients that bought some, and it was more like interesting just
Yeah. Yeah.
as a hobby, I guess, but not hearing anything about that these days.
Yeah, it's funny. I think Bitcoin with large institutions like BlackRock creating their spot ETF, right?
Yeah.
Um, Again, and for the listening audience, we're not recommending that you do any of these. Okay, I can't, talk to your advisor, figure
Hmm.
out if it's the right fit for you. But with institutions like BlackRock having a spot ETF on it, it kind of gives it a little bit more credence or legitimacy from the normal audience. I find when people are coming to me and saying, "Hey, listen, like, is this like a real thing still? It's not like, funny money." Well, I have, it really just trying to figure out, do you want to put some of this into your portfolio or not, is an ongoing conversation, right? I think
Hmm.
it makes a lot of sense to at least have the dialogue to see if it fits into your game plan or not. Do
Hmm.
you believe in it? Do you not? Does it make you uneasy or not? How is your risk profile? I'm certainly not putting all my eggs in that one particular basket, but um, yeah,
Just
I think it's,
alternative investments in
yeah.
general have,
Mhm.
I think, have been are much more prevalent now than they were a couple years ago. I mean, I've got clients that uh, on their own, not because I recommended it, but you know, invest in art, invest in, there's more prevalence of like hedge funds, private equity, private credit that's more available today than it
Yep.
was even 2 to 5 years ago. And
Yep.
so, and all those could play a piece in someone's overall plan. I don't think necessarily should be a big part of most people's plan just because of the level of risk and typical illiquidity with most of those things. But you just have to understand what you're getting
Yeah.
into.
Yeah. It's funny. I think I don't know if it's coming off the heels of COVID a few years ago, or um, Silicon Valley Bank kind of going under, but I'm having more conversations also about sort of preparedness, I feel like. Or
For a down market.
yeah, or banks going under, or a little bit of insecurity with a financial institution, or should I be moving money to different accounts and having some money at this bank and some money at this bank and some money at this bank. And I think for me personally, I've moved money to several different banks to try to provide a little bit of security, right? I give you an
Hmm.
example. Like this week I had a fraudulent outreach in one of my checking accounts. They froze all of my accounts at this one particular bank,
Hmm.
all of them. And for my business accounts, I have to go open them in person. So I had to spend 2 hours at the bank opening up new business accounts. All my money's frozen there for 4 days.
Wow.
If I had my mortgage coming out of that account, I'd be calling my mortgage company. So, you know, I think forward thinking preparedness is definitely more of a conversation today. Like, at least I subscribe to that, right? Like, we're having a kid any day now. I put several months. I used to just keep a little bit of money at the bank where my mortgage gets pulled out of, um, and transfer the money in every month. Now I have 3 months worth of my mortgage payments in that particular bank account. So in case, like, I don't know, something pops up,
Hmm.
I forget to pull the money, or I'm, not around,
Hmm.
money will just flow into that account for several months before anybody has to worry about anything. So
Yeah.
I don't know if you're hearing those kinds of things or not.
I think in general, especially around that time when banks started to come under pressure, I was getting a lot of those calls of should we do anything? A little less so now, but I think in the end, I think it resulted in people thinking more thoughtfully around where they should allocate money, what to do, how to prepare for an event like that. So in the long run, I actually think that was good for the consumer. One thing another thing that I am hearing now is because markets have been on a pretty good run, at least the end of last year, Q1 of this year was pretty good. Um, is I've had some people reaching out and say, hey, I heard some billionaires are selling, and I heard the market is ripe for a correction. And you get those calls or emails from time to time, at least I do. And it's always important to remind people that market timing doesn't work, then nobody knows what the future holds. And so often, I mean, so often people throughout my career, 15, 16 years, there were people just that were just dead set of, I'm sure the market's about to correct, so I'm going to leave money
Yep.
aside against my recommendation. And then, that typically doesn't work out because timing the market is both hard on when to take the money out and hard when to know exactly when to put the money back in.
Yep.
Nobody does it successfully every time over the long term. You may get lucky in the short term, but I think that's also like kind of a constant conversation of having someone in your life that you can bounce those ideas off of and just kind of alleviate some pressure, or alleviate some concern. I responded with something along the lines of don't fall prey to market timing, stock picking, and just stick to the long-term strategy. It was, a little bit more thought out than that. And they responded, great. That's exactly what I need to hear. Thanks. I'm all set.
Yeah. Yeah. I mean, I think, whatever's going on in the environment, good, bad, and different, causes either opportunity or anxiety or some level of like question in somebody's mind, right? And I think our value proposition has always been that place to go to, again, to sort of bounce those ideas off of,
Hmm.
and frankly come from a third party, clear, educated, and sort of thoughtful position, right? Like I see all of the pieces on the board.
Hmm.
Here's what's going on. Let's walk through the different scenarios and come to a decision on like what's the best course of action for you personally. What do
Hmm.
you actually want to accomplish? Does what you're saying line up with that or not? Let's actually back it up with some real economic facts and not just emotional kind of decisions. And I think people in general appreciate that approach to kind of give some calm clarity to a
Hmm.
situation.
Hmm.
You know what I mean? And ultimately, they may end up doing whatever it is that they came to talk to you about, good, bad, and different again. But, really is just an exercise of a safe space to kind of walk through these different iterations. And I think that is something that is very unique to our process, but like super helpful again today in current environments and probably always, right?
One of the reasons I love what we do is because we give people more self-confidence. Like like you said, they may end up doing what they came to us to decide on, but now they're going to do it with more confidence because
Yep.
we had the conversation. They, ran it by someone who's an expert in the field and knows their personal situation. And so,
Yeah.
get to have some meaningful impact in people's lives is pretty
Yeah,
cool.
for sure. Again, I think the purpose of today's conversation was just kind of talk a little bit about what's going on in the current environment and why I think now, or why we think now, is a good time to engage with an advisor. If you're
Hmm.
not already talking to somebody, you should be having a conversation with someone. But there's always a lot going on,
Yeah.
right? There's always economic pressures, real life pressures, things that we can't control, good, bad, and different. And so, like, as life gets more and more and more and more complicated, and there becomes more and more decisions to be made with less and less time, the
Hmm.
more important it is to engage with somebody to actually walk through this dialogue and these conversations so we can, or so, people can get help, so, I think that's important for people to hear, just
Yeah.
as a reminder.
Yeah, absolutely. People know what I like. My friends, acquaintances, they know what I do, and so I'll often hear the comment of, "How about those markets? Crazy, right?" Like, so there's just like there's always uncertainty, right? Like nobody knows what tomorrow holds, the next week, next month, whether in the markets, the economy, or your personal life situation. And so, because it's always changing, and there's unlimited information out there,
Mm.
it can get overwhelming. And so to have someone to go to where you can have those confidential conversations and just really open up is it's pretty helpful. To our listening audience, thank you for tuning in. If you're watching, good to see you. uh Please do like and subscribe, give us a 5-star review. We read and appreciate every single one of them. And until next time, have a great day. Talk to you soon.
Appreciate it.